Hi, my name is Rick Meadows, CEO of edponzi.com, and I want to thank you for watching this video called Bridging the Gap. I have a question for you. Why do most people that trade in the market struggle? And by struggling, I'm saying they're losing money or maybe sort of breaking even, maybe making a little bit of money, but knowing that you're leaving a lot of money on the table. How can one person make a lot of money and another person sort of lose money looking at exactly the same things, right? My belief is that it's all in your head. Trading is primarily psychology. Yes, you do need to know the best tactics and strategy in order to execute trades. But if you're unable to execute those trades, it's all useless, isn't it? So let's talk about that. Let's talk about the mind and sort of how the mind works, right? Your brain is made up of several pieces, and one is the subconscious. And what the subconscious does is that it stores all of your life files sort of in like one little area of your brain. So it teaches you how to react to different situations. In other words, say for example you're a child and you put your hand on a hot stove. What's going to happen is that you may do it again for those who don't, whose subconscious isn't really like telling them that it's danger here, but you probably won't do that again. You're not going to put your hand on a hot stove too many times. You're going to say, that hurts, and the subconscious is going to keep you from doing that. So what happens is you see a hot stove, you have a thought, it gives you a feeling, fear, pull back, and you don't put your hand there. How about like a dog? Say for example, you're a small child, and you see a cute little beagle, and you go up there and you want to see dog, and you want to pet this dog, and all of a sudden, and what do? Right? You're going to be afraid. Now the next time that same child sees a beagle or some other dog, they may be fearful, and it could be the very nicest dog in the world. See, that's your subconscious telling you how to act. So you see the dog, your subconscious blasts out a signal, you get a feeling, and then you take action, right? Same thing happens in trading. Say for example, you go down, as you're going through your trading process, what you do is you go down to the bookstore. Go down to the bookstore and you buy a book on trading, right? And so what all books and all responsible traders are going to tell you is that anytime that you enter a trade, understand your risk and you put in a stop, so that when you're wrong, it's not a matter of if you're wrong, it's when you're wrong, because you're going to be wrong, you know how much money that you're risking in that particular trade. Okay? So that's called putting in a stop. So let's take a look at, say, support and resistance. Basic support and resistance. I like to call it supply and demand, because to me that's really what it is, isn't it? Demand is an area, is a price point that when the price comes down to that area, price goes up, right? Demand, there's people buying, there's more buying than selling, and so the price is going to go up. Same thing is with resistance. It's really a supply area, isn't it, right? Resistance, it doesn't seem to be able to go through that price, because what happens is when it gets up to that price, the sellers take over and there's more selling than buying goes on, and the price goes down, right? So one of the things that we try to do by developing an edge is sort of defining what are these supply and demand zones. Okay, so we want to buy it at demand and sell at supply, or we want to buy at support, sell at resistance, correct? Good. So now, price is coming down. We have a little demand area here, right? Comes down into this little demand area, and you have a price to say, I'm going to buy it down here, but if it breaks this demand zone, I'm going to put my stop in down here. Then what happens? You buy it there, comes down, knocks out your stop, and then the price takes off. And you're like, boy, oh well, that's going to happen. They always told me that, you're not going to make money in every trade. Okay? Happens again. Price comes down, goes into that demand area, you put in your stop down here, you hit the price here, goes down, knocks out your stop, and away it goes. And you're like, geez, that kind of hurt, right? So you do it again. Comes down, goes into this demand zone, you have your stop, goes down, knocks down your stop, and the price takes off. So your subconscious starts playing with your head a little bit. What they say is that, gosh, that losing money really hurts. And if you just wouldn't put in a stop, you'd be making money right now, wouldn't you? Now you kind of like start feeling better. You start losing some of that pain, you start feeling better. So then on the next trade, you say to yourself, on this trade, I'm not going to put in a stop. Just this one trade, just this once. So it comes around, price goes down into your demand zone, right? You hit the trade. This is where your stop would have been. Price comes down where your stop should have been. It doesn't hit, and the price takes off, and you make money. And that feels better, right? Okay, just this next trade, I'm not going to put a stop in. So it comes down, goes into your demand zone. This is where your stop should have been. It comes down to the where the stop should have been, and the price takes off, and you made money again. And you're like, this is awesome. And you feel a lot better than you did when you had those stops. Price comes down to the demand zone, goes down to where your stop should have been. You hit the trade, goes down to where stop should have been, and it takes off again. And you're like, this is awesome. You are now trained. You will never use stops again. In fact, if you try to put a stop, if you use a mouse, right, and you try to put a stop in, your hand will shake. Your subconscious will not let you put that stop in. You have now trained your brain how to think, right? And what actually happened is that, first of all, understand that even if you put a stop in and you get stopped out, that doesn't mean that you can't re-enter the trade. Because what we're trying to protect ourselves from is this. Price comes down into the demand zone. You have their stop where it should have been. It goes down to the stop and it keeps falling. And you don't have your stop in place, do you? Price continues to fall. And what do? You say, well, this thing is so oversold, it's gotta come back. So I'm gonna add some stock. I'm gonna add some stocks to this. I'm gonna add to my position. Bring my dollar cost average down because it really should have gone up from here. So why can't it come back up to this area? It's got to. It's got to come back. Price goes down a little bit more. Now you're starting to feel like the anxiety, starting to get anxious. Oh my gosh. Add a little bit more to the position. Bring that dollar cost average down a little bit more. Price starts coming up and you're like, oh good, it's feeling good. I'm almost going to break even. And bam, price goes back down again. And you're like, oh! Finally, you can't take it anymore. And you get out of the position. Always remember that trading is about three things. It's about probability, leverage, and risk. Each time that you take a trade, one of four things is going to happen. You're going to have a big winner, a small loser, or a big loser, right? And now what we just had in that last example is that we had a big loser, right? What happens in trading, people get things sort of upside down. And if you're upside down like this, it's very difficult and even maybe even impossible to make any money trading, right? You know, if you're in that zone where you're up a little bit of money and you take the money and you take the money and you take the money, every time that you're up a little bit and you never let your winners run, very difficult to make money, especially if you're letting losers run. See, we kind of have this backwards, right? We want to let our winners run, cut our losses off. Okay? So you must stop the big losers, because what will happen? Say, for example, you can go a week, 2 weeks, a month, 2 months, 3 months, 6 months in the green making money. And you have one big loser and you wipe all of it out. And that's painful, right? Let's talk about what you're actually trying to accomplish. You know, say for example your mortgage payment or your rent or whatever is $2,500 a month, and a car payment is, you know, you got a decent car, you're paying $500 a month, $3,000 a month. If you're able to make $3,000 a month, would that change your life? Some people have even bigger financial goals. What would it be like to make $20,000 a month? $30,000 a month. Now that's what I'm talking about, right? Now, some of you, when you hear those kinds of numbers, $20,000, $30,000 a month, you say, I can't do that. Some of you saying, I can do that, right? Let me tell you something. Right now, you're both right. You can make that kind of money, and if you don't believe that you can make that kind of money, you won't. Okay? So here's what I want you to do. I want you to fill in the blank. Rich people are blank. Think about it. Rich people are blank. Some of you are saying rich people are smart. Some people are saying rich people are generous. Some people are saying rich people are jerks. Right? We've run into a couple of those. Let me tell you something. Put it down on paper. Rich people are blank. And if you have more negative comments to say than positive comments, that could be part of the reason that you're not doing well as a trader. Because as soon as you start making some decent money, right, you may be putting on trades that you say, geez, why did I do that? And you gave all your money back. Because your subconscious, for some reason, is telling you that rich people are something negative. Remember, rich people are whatever, just like middle class people are and poor people are. There are good and bad in every class. Money has nothing to do with it, right? Let me give you a little bit about my background. I'm from a very small town up in northern Wisconsin, and there are lakes everywhere. I'm very, very grateful where I grew up. In fact, my parents live on a chain of 28 lakes. It's the largest freshwater chain in the world, but it's a very small town. In fact, we're 90 miles to the closest mall, right? We were in the middle of the woods. Now, our industry was tourism. And so we were about 6 hours by car north of Chicago, and many Chicago people had their summer homes up on Eagle River. And so, like, through the years, I got to know some of these kids growing up. And what I found is that a lot of them are jerks, and I didn't like them. You know, I felt that they were sort of entitled and things like this. And to kind of give you an example, my dad was a salesperson up in northern Wisconsin in the UP of Michigan. My mom was a retired school teacher, 8th grade English. Now, one of my friends' dad was the band teacher at the middle school. And they had, the mom didn't work, and they had, so they just had his income. And they had a nice life, you know, it was kind of a middle class, northern Wisconsin small town life. They had a nice home, they had a fishing boat, they had nice clothes, they ate well, life was good. Now, as we got older, you know, it was kind of a thing that everybody had a speedboat. So that, you know, because we had lakes everywhere, and the kids, you know, we kind of spent their summer out on the lakes. Now, Jim's dad couldn't buy a big fancy ski nautique or anything like that, but he was able to buy a boat. And the boat was older with one of those big motors on it. You know how those go, right? And it was strong enough that we could actually water ski behind it, and it was a lot of fun. One day that we were landing the boat, putting the boat out in the water, and there's a couple of the rich kids from Chicago hanging out by the boat landing, and they started teasing Jim about his boat. And I just really, really despise that, you know. And so what happened with me, like going through life, is that like every time I'd start making some money, I'd do something to kind of screw it up to bring it back down. I call it the money thermostat. Now, if your mindset is rich people are something negative, just change it around. And what I did is I started saying, you know, rich people are generous. You know, some of the most generous people I know are rich. You know, take Ed Ponzi, for example. He does a lot of work in the community. You know, I work in my community, and I wouldn't be able to do that if I didn't have the extra money, right? Rich people are very giving. Rich people are both, you know, you don't have to be smart to be rich. We know that, right? You know, you can be rich, but you have to be able to change your mindset to say rich people are something positive, and just change that mindset, and you'll be surprised how that's going to affect your trading. Let me ask you this. Do you believe that money buys happiness? Some of you say no. And let me tell you something. I believe that the lack of money does not buy happiness. I say being in debt does not buy happiness. I say not knowing how you're going to pay for your son or daughter's college tuition does not buy happiness. I say not knowing where you're going to be being able to pay for this or that doesn't buy happiness. See, to me, going on a trip, that makes me happy, and that takes money. Giving some money away to the less fortunate, that makes me happy. But I need money to make that happen. So does money, does it guarantee that if you have money you're going to be happy? No. But to say that money doesn't buy happiness means that you've never had it in your life. So you need to step up to that, right? So let's go back and talk about trading again. Once again, trading is about probability, leverage, and risk. Say, for example, we're going to flip a coin, right? And it's a normal coin. It's a normal quarter. We're going to flip the quarter, and here's the deal, right? If it comes up heads, I pay you $2. If it comes up tails, you pay me $1. That's a good deal for you, right? Yeah, I'd take that bet. So let's do it. Tails, pay me $1. Tails, pay me another $1. How do you like my fake coin? Tails, pay me another $1. You want to do it again? Okay. Tails, $1. Again? Great. Tails, pay me another $1. You want to do it again? See, some of you are saying, no, I won't do that again. And that's exactly what you're probably also doing in your trading. Maybe you have a great trading strategy and you know the edge and probability of a particular trade. The trade setup comes and you take the trade and it goes against you and you lost money. Ugh. Okay, I'll do it again. You take the same trade, A, B, C, and D line up, and it goes against you and you lose money. Ugh. A, B, C, and D line up again. You take the trade and you lose money. Ugh. What do? You stop taking the trade. Then the next time that setup comes, the exact setup, it does exactly what you expected it to do. Correct? I hate it when that happens, right? And it's like the market knows when I'm in. They know when I'm taking that trade setup and it goes against me, and when I don't take the trade, it does exactly what I thought it was supposed to do. See, it's just like the coin flip. See, what happened is you stopped betting me because 2 or 3 tails came up in a row. When in fact, if you'd continue betting me, at some point you're going to take all of my money. But maybe you don't have the confidence in your trade. You don't have the screen time in your trade. You don't have the account balance in your account to be able to have enough statistical evidence to know that you continue taking that trade. Again, I grew up in a small town in northern Wisconsin. If you didn't grow up in the city limits, and believe me, city was small, it's 1,300 people, right? If you grew up outside the city limits, you had to dig a well for your water. Now, if you went deep enough anywhere, you were going to hit water. See, what you're doing with your trading is that you go out and you say, okay, I need to dig a hole for some water, and you start digging and you go down 4 or 5 feet and you say, there's no water here, I'm going to go over there. So you start digging again and go down 4 or 5 feet, there's no water there. So you go, I'm going to dig over there. So when you dig a hole 4 or 5 feet, there's no water there. Now what happens? You look at your yard and your wife or your husband comes home and says, what are you doing? There's holes all over the yard. Yeah, I was out there digging for water. Why don't you just dig a little deeper? Stay with your original plan and maybe you'll hit water and you won't have holes all over the yard. Just like your trading account, these constant paper cuts, you're getting whacked, right? But in order to understand that, you have to understand the probability of your trade. And this is one of the reasons why you must have a mentor, right? You need to have somebody who's actually gone through the process to help you execute those trades, maybe good trades that you have. See, as a trader, the P&L is in your face. In the real world, you don't go out there and say for example you had a really good week at work and you did everything great and your boss is saying, good job, we're going to dock you $300 because you did everything exactly right. See, that's what's going to happen as a trader, right? You're going to do everything exactly the way you should have and you lost money. And it's how you manage this and how you train your subconscious to think is going to dictate how you feel about it and how you trade moving forward. This is why you must have a proper education with a mentoring program to help you execute those trades. That's why buying books for many people doesn't work. It didn't work for me. Yeah, the information was there, but I wasn't able to execute it because I didn't have that sort of like that edge in terms of somebody saying, yes, Rick, stay with the trade. We're in a good trade. Yes, yeah, we're going to be hitting it here in this area, and if it goes wrong, this is exactly where I'm going out. See, what that does is that removes some of the emotion, and we start training our subconscious, because when you have that and you start trading with an edge, you're going to train your brain how to think. And when you train your brain how to think, suddenly you're going to see that you're making some money. And that feels good. And when the subconscious feels good, it becomes automatic. See, Ed is going to show you how to maneuver the markets real time and put your trading plan into action. And every course that you take with us, it includes a trading plan. And the trading plan is going to include your goals, what it is that you're trying to accomplish, and then we're going to help you execute that on the financial side. Please give me a call, 201-209-0266, and I'd be more than happy to discuss your trading goals and see if we can help you. And again, remember, there are mentors out there. If you decide not to go with us, that's okay. You know, but get a mentor. If you're struggling as a trader, get a mentor. The one commodity that you have is time. Take the time that you have right now. Use it wisely, because the decisions that you make today have a massive impact in your life. 5 and 6 and 10 years and 20 years down the road. So again, give me a call. My name is Rick Meadows, 201-209-0266. I'd be more than happy to discuss this with you. Thank you so much, and I look forward to speaking with you.